Hey, what's up guys? Welcome back to the channel. Today, we have an exciting and in-depth review of a broker-backed prop firm that I've been testing for a while now, ThinkCapital. If you're new here, let me catch you up real quick. I've been working hard to hit my goal of $3 million in funding and a $1 million payout, and I've been exploring various prop firms along the way. ThinkCapital is one of the prop firms I've been trading with. And after spending a significant amount of money, I've got a lot of insights to share about ThinkCapital. I always make sure to check Prop Firm Ask if you haven't heard of them. Prop Firm Ask provides in-depth and real reviews on all the major prop firms out there. And it's a fantastic resource for anyone looking to get an honest and detailed breakdown. I always recommend checking their reviews first before committing to any firm, as they give you a great starting point for making a more informed decision. If you've been looking into ThinkCapital, or if you're just curious about broker-backed prop firms in general, this video will give you a comprehensive breakdown of everything you need to know. I'll go into depth about their challenges, the profit splits, drawdown limits, and rules. Plus, I'll share my personal experiences, including the mistakes I made so that you don't have to go through the same frustrations. So, grab your coffee, hit that subscribe button, and let's jump into everything there is to know about ThinkCapital. Let's start by talking about what ThinkCapital is a broker-backed prop firm, meaning they're partnered with ThinkMarkets, a well-established financial services provider. This gives them serious credibility and stability in a space that can sometimes feel like the Wild West. Being broker-backed gives ThinkCapital the financial muscle they need to handle large orders. And it also gives you, as a trader, confidence knowing that the firm has the resources to process your trades smoothly and without delays. A lot of prop firms out there may not have that kind of financial backing. And in the past, we've seen many firms that fail or go under due to liquidity problems. But with ThinkCapital, you don't have to worry about that because they have strong liquidity and the stability that comes from being backed by a reputable broker. Now, I know a lot of you might be asking, why does that matter for me? Well, being broker-backed means you get faster market execution, reliable support, and a secure trading environment. No more worrying about whether or not the firm can pay you out if you're successful or whether you'll face any liquidity issues when you try to scale your trades. Being broker-backed by ThinkMarkets has a few critical advantages. First, it ensures that ThinkCapital can handle large trading volumes without issues. So if you're trading with high leverage or large positions, you won't run into issues with order execution or liquidity like you might with some smaller, less established firms. This is especially crucial for traders who use high-frequency strategies, scalping, or any algorithmic trading that relies on quick execution. Asterisk. For example, if you're trading on shorter time frames, like the 1-minute or 5-minute charts, fast execution is essential to avoid slippage or missing out on opportunities. Since ThinkCapital is backed by a broker, they have stable market access, which means less risk of slippage and more accurate fills for your trades. This can be a game changer for those who rely on precise market entries. Let's dive into the core of ThinkCapital, the challenges. ThinkCapital offers 3 types of challenges: the 1-step challenge, the 2-step challenge, and the 3-step challenge. Here's the breakdown of what you get with each. 1-step challenge. The 1-step challenge is the easiest and fastest route to getting AEA. This is the first challenge I personally, and it's great for those who don't want to go through a long evaluation process. With the 1-step challenge, you can manage up to $600,000 in funding, and you get a 90% profit split, which is one of the highest I've seen in the industry. That's right, 90%. So, you get to keep most of your earnings. What sets the 1-step challenge apart is the 14-day payout cycle. This is huge because other prop firms typically make you wait anywhere from several weeks to a month, but ThinkCapital pays you out in just 14 days. Fast payouts like this help keep your cash flow moving, allowing you to reinvest your earnings and keep trading with more capital. This challenge is perfect for those who want to quickly prove their ability and start trading with real money. Plus, if you're successful, you can scale up to $1.5 million in funding. The two-step challenge. The two-step challenge is more challenging, but it gives you more opportunities to showcase your trading skills. With this challenge, the profit target is higher and the loss limits are a bit tighter. It's perfect if you're looking for a more comprehensive evaluation of your trading style and strategy. 3-step challenge. For the step challenge, we have which is the most intensive and thorough evaluation. If you want to prove your ability over a longer time period, this is the challenge for you. It offers the highest possible funding and is designed for traders who want to scale to the maximum potential. When it comes to prop firms, profit splits and payout cycles are two of the most critical factors in deciding whether a firm is right for you. ThinkCapital offers a 90% profit split, which, as I mentioned earlier, is pretty amazing. This means you'll keep the majority of your earnings. Unlike many other firms that might take a larger cut, the 14-day payout cycle is also a big advantage. ThinkCapital processes payouts twice forever to get your money. If you're serious about trading, payouts are essential for maintaining consistent cash flow, especially if you're scaling up. Now, let's talk about the drawdown limits. This is another critical part of any prop firm's challenge. ThinkCapital has static loss limits, which are predictable and clear. For example, in the one-step challenge, they set a daily loss limit of 4% and a maximum drawdown of 6%. This means that once your account reaches a 4% drawdown in a single day, the challenge is over, even if you're still in profit. Here's where I made a mistake. I assumed the daily drawdown was 5% instead of 4%. As a result, when I hit that limit, I breached the account, even though I was technically in profit. This mistake was costly, and I can't stress enough how important it is to read the rules thoroughly before you start trading. I've been through a lot with ThinkCapital, and there are a few key lessons I've learned along the way. One of the biggest mistakes I made was misunderstanding the rules, particularly the loss limits. As I mentioned earlier, the daily loss limit is 4%, not 5% like I originally thought. This mistake was frustrating, but I've learned from it. Another mistake consistently. Sometimes when I was in profit, I became overconfident and didn't use stop losses. This led to a few trades running against me, and I ended up breaching the daily loss limit. So, if you take anything from this video, always use stop losses and manage risk. ThinkCapital offers you a great platform to scale, but risk management is key to your long-term success. Now, let's take a moment to talk about trading psychology, because that's something that's just as important as knowing how to execute trades. A lot of traders focus on the technical side, the charts, the indicators, the patterns, but they often overlook the mental and emotional aspects of trading. And trust me, this can make or break your trading career. When you're trading with a firm like ThinkCapital, it's easy to get caught up in the rush of making money, especially when you see that 90% profit split staring you in the face. But here's the thing. Discipline is key. You have to learn how to manage emotions. The market can be volatile, and you're going to face ups and downs. If you're not careful, the emotional highs and lows can lead you to make impulsive decisions. For example, I've had moments where I was up, and I thought, okay, I'm in profit. I can take a bit more risk. But that mindset led me to break my rules, and I lost more than I should have. Speaking of discipline, Let's talk about advanced strategies help you maximize your success with ThinkCapital. The most important thing I've learned from trading with them is that you have to adapt your strategies to their challenge rules. Since they offer static loss limits and high profit splits, you can leverage your strategies to scale effectively. For example, one strategy I've been using is scaling in. Instead of putting my full position in at once, I enter a trade with a smaller size and increase it as the trade moves in my favor. This allows me to manage my risk more effectively, especially when I'm close to the daily loss limit. When you're working with a 4% daily loss limit, being able to control your position size and gradually increase it as your trades show positive results is a great way to limit risk. Another strategy is to use technical analysis in combination with market sentiment. By understanding the overall trend and market conditions, you can align your trades with the broader market direction. For instance, when there's high volatility, I tend to focus more on breakout strategies and trend following setups. But during low volatility, I prefer range trading strategies, as the market is more likely to move sideways. These strategies, combined with solid risk management and emotional control, are what can take you from being a good trader to a great trader. By using ThinkCapital's rules to your advantage, you can build a strategy that not only minimizes risk, but also maximizes returns. As we wrap up today's video, I just want to say that ThinkCapital is definitely a solid option for traders who are looking for a broker-backed firm with great liquidity, high profit splits, and predictable rules. It's a great choice for anyone who has experience with trading and is looking for an additional funding source to scale up their trading. However, discipline is key, and you must be prepared to follow the rules and manage your emotions. If you're a beginner, I'd still recommend starting with a more lenient firm to get the feel of proppy trading. But once you feel confident, ThinkCapital is definitely worth considering. Finally, if you're ready to jump into ThinkCapital, don't forget about discount codes from Terra. Use it to get started and save on your challenges. Make sure to do your own research, because everyone's trading journey is different. But from my experience, I can say that ThinkCapital offers a great platform to take your trading to the next level. All right, guys, that's all for today's review of Think. I hope you found this video helpful. Let me know what you think in the comments. Have you traded with ThinkCapital? What's your experience been like? I'd love to hear about your successes or any challenges you've faced. And don't forget, if you want to try ThinkCapital, make sure to use discount codes from Terra to save on any of their challenges. It's a great deal to kickstart your trading journey. Thanks for watching, and I'll see you in the next video.